Hello and welcome to this weekly market recap for the week ending Wednesday, August 27th, 2025. I'm Tom Bowley, Chief Market Strategist at EarningsBeats.com. It's a pleasure to join all of you again this week. Finally, some good news. We got a lot to go over, so I don't want to spend a whole lot of time here, but I do want to mention that the Fed announced, the Fed speech, Fed Chief Powell's speech from Jackson Hole on Friday. He finally mentioned interest rate cuts. Finally. So it's taken months. I think they're finally admitting their mistake, that they should have been cutting rates all along. He pretty much said that a couple of months ago when talking about the fact that if they had known that tariffs weren't going to create higher inflation, they would have already been cutting rates. And now they finally have admitted that, hey, it's time to cut. So that's the good news. We saw a big surge in small caps last week. So let's go ahead and take a look at that action from last week. And again, keep in mind, I'm looking from Wednesday's close, last Wednesday's close to this Wednesday's close. So that's the week we're looking at when I talk about the 1 week performance. Russell 2000 small caps gaining 4 2/3%. The mid cap index up almost 3%. You can see clearly those were the two big winners over the course of the last 5 trading days. Transportation, another beneficiary from lower interest rates, gaining 1.8%. The Dow Jones 1.4%, NASDAQ 100 1.36, and then of course the S&P 1.34. So definitely money was rotating into the small caps, which I think is a good thing. But maybe, well, equally important, I would say, was a massive breakout on the Dow Jones. Even though the Dow Jones was only up 1.4%, it was a big 1.4%. Finally clearing with gusto the 45,000 level. And that, believe it or not, measures to 53,000, this pattern. I'll show you that in just a minute. Moving on to the sectors. Energy gaining 4%. So finally seeing a little bit of strength in the energy group, which had been lagging for quite a while. Consumer discretionary, also a big week, gaining 2.7%. Materials 2.25%. Technology 1.77%. And so forth down the list. You can see 8 of the 11 groups finished the last week higher. The 3 that failed to perform well, one of them being consumer staples. So when you look at that ratio, consumer discretionary versus consumer staples, which to me tells us a lot of what we need to know about the stock market and where the stock market's likely to go, because Wall Street is not going to pick consumer discretionary over consumer staples if Wall Street believes the market's going lower. That normally would be exactly the opposite. We would see money rotating into staples. So I think the biggest thing, the biggest takeaway last week in terms of sector performance was the fact that consumer discretionary stocks went up 2.7% and consumer staple stocks were down almost 3%. Huge, huge spread between the two. And I think this sets up bullishly for stocks. So let me show you Dow Jones here and the fact that I believe that we have just broken out and we're going to rise another 8,000 points above the 45,000 level to 53,000 in time. I'm not saying it's going to happen over the next couple weeks, but I wouldn't be surprised over the next year, maybe next 12 months, or maybe by the end of 2026. The Dow is not a huge mover, not a really fast mover. 8,000 points would be, I don't know what, probably about 18%, something like that. So in order to get that kind of move, it's going to take a little bit of time, but I do believe that's where we're going to head now on the Dow. Here is an inverse head and shoulder pattern off of the long uptrend. You can see we got up to 45,000 back in November of 2024, went down, put in what looks like a left shoulder, came back up to 45,000 again to establish a neckline. The head, that was the cyclical bear market that we saw through early April. That inverse head went all the way down below 37,000, came back up to 45,000 again in July, pulled back, put in a right shoulder, and here over the course of this last week, finally getting a big breakout on the Dow Jones. Our first, really demonstrative, I'm not sure if that's the right word, but finally a confirmed, maybe that's a better word, a confirmed breakout above 45,000. So I believe this pattern is now complete. I think to the downside, You have the rising 20-week moving average. So I'm not saying that it's going to be straight up and this is all going to be, roses for the next 12 to 18 months. But I think that rising 20-week moving average will provide excellent support if the Dow goes through a period of selling. And to the upside, I think we're ultimately heading for that 53,000 level. The measurement being determined by the distance from the neckline down to that inverse head. So actually, technically, a little more than 8,000 points. So I think we're going to get the 53,000 plus. I think that's going to be our target on the Dow. That's pretty exciting to go along with what we've been seeing in the small caps. So the small caps, the big thing I wanted to point out, this is when Fed Chief Powell had his speech from Jackson Hole. Look at 10 o'clock in the morning last Friday, August 22nd, and look what happened to the small caps as soon as the Fed uttered interest rate cut. Soon as the words were mentioned, over the course of the next hour, we saw a melt up in small cap stocks. And after consolidating for a couple of days, we actually went back up and broke out above that level today. I think that is a really good sign. I think this is a group that continues to power toward a measurement that I talked about a few months ago, saying that I thought the IWM was heading for the 250 level, 248 to 250. We're now up to 236. This came from a level when we were testing the 20-day back at 207. So we're well on our way to getting to that target. I think we're going to go a lot higher than that. That's just my initial target based on the pattern. That was also a head and shoulder pattern. It was a bottoming head and shoulder pattern, reversing head and shoulder pattern, if you will. But that breakout above the neckline around 210, if you remember, measured up about $38, $39. That takes us up to that 248, 249, maybe 250 area. So I think in time, that's where we're heading. And I don't think it's going to take that long for the small caps to get there. Couple things. So I get asked every once in a while, what's the difference between, small caps and the S&P 500 large cap? Why do they move different? Why aren't they all kind of moving at the same pace? Well, you have to look at their makeup and their composition. So I thought I'd pull this up for you. This is the IWM showing you sector exposure. So financials, industrials, and healthcare are the three largest component sectors within the small cap IWM, the Russell 2000. These are the three that make up the majority. I mean, that right there is 50% of the IWM, and I haven't uttered a word about technology yet. When you look at the spider, on the other hand, information technology is 34% of the spider. So when you've got those large cap growth names leading the market to the upside, the spider is generally going to outperform the IWM. It's because of the way these stocks, the way these ETFs are comprised. So let me show you on this chart. Here is the top panel, technology relative to the S&P 500. So when technology is leading the S&P 500 here, you can see that the Russell 2000 struggles against the S&P 500. However, look at what's happened here in August as money is rotated a little bit away from technology. And also down here on the bottom, you can see large cap growth versus large cap value starting to get hit a little bit. When you see this happen, look at what has happened to the Russell 2000 on a relative basis. So if you can visualize, and that's what I love about charts, is it helps me visualize what's taking place in the market. I don't care what the media is talking about, could care less. What I want to see is where's the money going. And I think it's pretty clear here that the Russell 2000 over the last couple of weeks has now started to see an absolute explosion to the upside relative to the S&P 500. We've gone from a 6-month low to a 6-month high in 2 weeks on a relative basis. So money is rotating very, very quickly towards these small cap stocks. Meanwhile, money is rotating away from some of the large cap names where we've seen so much strength coming off of the April low. And when you've got all that money that's starting to come out of those stocks and pouring into small caps, you're going to get this kind of relative performance that we've seen over the last couple of weeks. I don't know how far this relative strength goes. I believe we're just getting started. I think we're in the first inning of a 9-inning game in terms of relative strength in small caps. So if we take a look at the regional banks, this is an area that would benefit from lower interest rates. Why? Because small banks borrow from other banks and from the Federal Reserve using the Fed funds rate. So when the Fed cuts the Fed funds rate, borrowing costs get a lot cheaper for these small banks. Their access to capital gets much cheaper. And then if they can turn around and lend, if that should strengthen the economy. And if the economy is strengthening, then you've got the ability of smaller companies, mid-sized companies, to be able to borrow and compete against the large cap stocks. So let me just show you going back to 2000. This is the latter part of 2000 and into 2021. This is the KRE, the regional banking ETF, relative to the S&P 500. Look at that relative move in 6 months. It was massive. That came on the heels of the Fed funds rate dropping to zero. Free money for these small banks. And so look at the outperformance. What happened in 2022? Remember, we had the inflation scare, cyclical bear market. The Fed started to raise rates in 2022 and raised them throughout the year and into 2023. And look at what happened to the KRE. All of that access to capital went away. It was much, much more expensive for small banks to be able to access capital, to be able to lend. And that made it more expensive for small companies to try to borrow. And the Fed, by leaving rates higher for longer, that's one of the driving forces behind the relative underperformance of small caps over the last few years, really since 2021. Last summer, though, look at this huge move in June and July, especially in July. That was after we had that big drop in the the June CPI. And the whole market started anticipating rate cuts. And then we got to the end of July and the Fed said, no, we're not going to cut rates. They didn't cut. And in fact, never really talked about it being on the table for the next meeting. And you can see we went back down again. But in September, we actually got a rate cut and we started cutting rates. Look at the KRE, again, exploding, going up to an 18-month high, relative high by the end of November of 2024. Well, what happened in 2025? The Fed said, nope, we're putting a hold on rate cuts. We're going to leave rates higher for longer. That was the theme. So what happened? All of a sudden, everybody that got excited about the regional banks and about small caps went back away again. And for the next several months, we were moving down. Now, all of a sudden, we're excited about small caps, and you can see this big move. I think this is just starting. Look at this move relative to what we saw in July through November last year, when rates actually got cut 3 times. I think the Fed comes through in the fourth quarter and cuts in September. I think they should cut all 3 meetings to end 2025. If they do, I think we're going to see this relative strength line continue to go up, just like it did last year and just like it did at the end of 2020 and into 2021. So a couple of stocks I wanted to mention that are doing really well on the small cap front. These are stocks I've talked about with EarningsBeats members in the past over the last few months. Magnite, small software company, breaking out last week with that news from Jackson Hole, now at a multi-year high right now. I think this stock looks good. Also, we've got Rush Street Interactive. This is in the gambling area. AD line looks great. Here was its earnings report. It went sideways. And then again, with that news from Jackson Hole, we saw that stock break out last week. And then a semiconductor LASR, which is Knight Inc. Big gap up with earnings back earlier in August. After pulling back, it too broke out late last week. And I think these are just 3 examples of small cap stocks that could really make moves. All this accumulation showing up in the AD line, I think all of that's really going to be critical. All right, EarningsBeats. I wanted to take you over here for a minute. For those of you that are new, you can sign up for a 30-day trial. Hit that no-cost trial and get started. If you want to just sign up for our free newsletter, name and email address. We'll get that started for you. Tens of thousands of folks have joined us. We'd love to have you join us with our free newsletter. If you would like to sign up using your mobile device, there's an opportunity. You have a QR code on your screen. Simply scan that and it'll take you to a landing page where you can sign up. So let's talk again a little bit about some regional banks. The KRE is a very diversified ETF, but there were a few names that are, at the top of the list in terms of their weighting. And I wanted to go over a few of those with you. So one stock that I mentioned, I was actually doing an appearance on Benzinga. They have a pre-market prep show. I did that, I think, on August 15th. And this was one of the stocks. EWBC was one of the regional banks I mentioned there that I thought could do well. It's probably up about 4 or 5% since that appearance. But also, in addition to EWBC, a couple of others I wanted to just point out. Citizens Financial, CFG, making a breakout this week. Relative strength versus the KRE has been off the charts for the last 3 or 4 months. So I really like this one. Regions Financial, same thing. Big move up. Look at the relative strength just since the early part of June. Really strong here. Zion's Bancorp, Zion, Z-I-O-N, just making a breakout above the July high. This is another one I think could run. So just giving you a few examples of stocks that I think could perform pretty well as we move forward, some of the stocks within that space. All right, last thing, after hours. We had some earnings, actually a number of companies. It was pretty busy evening, Wednesday evening for earnings. NVIDIA, let me give you the latest here. After hours, the stock down about 3%. They beat revenues by about 600 million. They beat on their earnings. I think they came in $1.05 versus $1 estimate. So NVIDIA had a good report, but the stock's trading near an all-time high. So unfortunately, I think we're getting a little bit of a sell on the news kind of a thing there. One stock that actually is doing a lot better in after hours. Let me just show you here. Snowflake stock is up 12.5% after hours, trading at 225. That's about where the key level is. To me, the question tomorrow morning on Snowflake is, do we open above key resistance? The highest close that we have seen is 225.79. So that's the level I'm going to be watching. If we close at 225.80 or above, I believe that is a very, very bullish sign for Snowflake. If we open a little bit below that level, then we may have problems making the breakout on Thursday. We'll have to see where we open and how we trade. But this is one, they came out with some really strong numbers. Easy beat top line, easy beat bottom line. They credited their data center operations for the strong results. And the stock, you could see in after hours, really trading well. So anyhow, just a couple of names as we move on into Thursday that maybe you want to keep an eye on. Of course, the whole market follows NVIDIA. It's the largest market cap company. Talked about the S&P 500 and the weighting of the large cap names. NVIDIA has the largest weighting in the S&P 500. So the fact that it's down a couple percent after hours likely is going to have much more of an impact on the S&P 500 and on the NASDAQ 100 than it will on the IWM, that small cap area. So anyhow, that's where I see it for this week. Next week is a whole new ball game, new story, and we'll report what we find over the next week. But I'd certainly keep an eye on the small caps and the Dow Jones. That was a big breakout on the Dow Jones, getting through 45,000. Again, my prediction, the Dow Jones within the next 12 to 18 months hits 53,000. Hope you have a great week, everybody. Happy trading.